Welcome to video 3. Video 3, we are going to talk about everything candlesticks, market structure. We're going to get into price action. Price action is the language of the market. People say that math is the language of the universe. Well, price action is the language of the market. This is how it tells you what it's going to do so that we can take that information and do something with it, being our strategy. So, this is called a candlestick chart. There's different charts. There's this bullshit. There's the line chart. We use the candlestick chart. You can see it up here on TradingView, candles. So my candles are different. I have my green candles as blue, my down candles as black. It's like a gray, and then I have my background. It's like a cream color. This is probably what your chart looks like. I highly recommend you change this because it's terrible in your psychology. It also just looks terrible. And yeah, fuck that. So we're going to go back over here. But just so you know, green candle, red candle. Pretty simple. So let's get into what a candlestick is. Candlestick has a body and a wick. We're going to use two candles because we need let's say that's too big. Bullish candle and a bearish candle. They have wicks and bodies. Throw this out. Just like you can see here in the chart, zoom in, you have a bearish candle that has a wick, body. This one doesn't have a bottom wick. This bullish candle has a body and a wick. What does this mean? What does this tell us? Because each candle tells us a story. Each candle is an interval of time. You can see this right here. Over here, you have 4 minutes and 54 seconds. Each one of these candles represents 5 minutes because we are in the 5-minute time frame. You can see that on the top. If you go down to the 1 minute, the candlestick chart is going to look a little bit different because each candle is 1 minute instead of 5 minutes. So what that means, easy way to understand, is the last 1, 2, 3, 4, 5, 6. Is that 5? Oh, fuck no. The last 5 is 5 minutes. That 5 is one 5-minute candle. So now, let's not get off track here. Let's talk about candlesticks. Candlesticks, we're going to start off with this one being a bullish candle. There we go. Look at that. Look how fancy we're getting here. Bullish and bearish. Green, red. So this right here, you have the open, close, the high, and the low. Now, for the bearish candle, a little bit different. You have the open at the top, the high, still the same, the low, still the same, but the close is at the bottom instead of at the top. Why? Because let's break this down. During this move, during this 5 minutes, 1 minute, whatever the time interval it is, it tells us what price did during that period. So for the open, or for the bullish candle, you have the open down here at the bottom. We put a low in, then we came back up, put a high in, came down, and we closed at this level. Basically, price went up for that minute, that 5 minutes, that 30 minutes, that hour, whatever it is. It's the opposite for a bearish candle. You have the open, then a move up, put in that high, move back down, put in that low, and then close at the close of the candle. Because we moved down during this period and we moved up during this period. Is that simple? This is going to come as second nature to you over time. For now, if it doesn't make sense, completely fine. Next, we're going to talk about trends because now that we know what a candlestick is, how do you put them together? How do you actually read this, right? Because what we have is we have uptrends and then we have downtrends. And these consists of highs and lows. For a uptrend, here, let's make this even better here. an uptrend, a downtrend, green and red. We have here, we have a higher high, higher low, higher high, higher low, higher high, higher low. What does that mean? This high is, if we continued this down here, would be higher than this high, you can see on the chart. And this low right here is higher than this previous low. And then we have just continues, higher, 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 higher. And that is what makes an uptrend. On the downside, you have lower high, lower low, lower high, lower high, or lower low, lower high, lower low. It's like a fucking tongue twister. Why? Because if this was continued, you would have a high here. This is lower than that low. This is lower than that high. This is lower than that low, and it continues. The other condition that the market goes into, because this is the two kinds of trends. You have an uptrend and a downtrend. The other condition that the market could be in is what's called a consolidation or a range. And it's in no particular order, but it's basically just chop. That's what people call it. When people say like the market is just chopping, that's what it means. It's just a bunch of bullshit. And you could see this all over. You could see this even right here. That is a bunch of chop. You could see it right here. This is a bunch of chop. Why does it happen so much? Because price doesn't move straight up and straight down. Price is not going to go like this and then back up. And let's make this black again so it's not, don't think we're talking about a downtrend. Price does not move like that. Price does not move in a downtrend and then immediately come down and then go up. It doesn't do that. What it normally likes to do is come down, if we're in a downtrend, come down and then range around a little bit, fake some people out, and then continue, break structure back up. But the difference is here we just had this level and we're just like, yep, fucking there we go. That's not what happens. On lower time frames, you could possibly see something like this. That is not a full-blown trend, right? If you go to the 1 hour, you can see, and this is like a more respected trend, a 1 hour, you can see that when we came down here, came up, right, range, down. You'll have the occasional down, up, down, and this, you know why it's spiking so quickly, is because this is basically a big range. This is first week of March. It's been kind of ranging around, nothing crazy going on, but it's fine. You can still find trades in it. But it's just important to understand that, because that is where 60% of your losses are going to be in ranging markets. If you don't know where the trend's going, if you don't know what's going on in the market, you're not going to understand how you can capitalize on it. So now that we understand that the market moves in 3 different ways, we have an uptrend, we have a downtrend, and then we have ranges, right? We have 1, 2, 3 different things. And that was a Picasso drawing, as you could see. Now, let's talk about how these trends are made, right? You have highs and lows and highs and lows and lower highs, higher highs, lower lows, all this stuff, right? How does it happen? I'll tell you the easiest way, because when I first saw a video on this, when I was first getting into this, I saw some guy and he's like, yeah, it's just right here. I'm like, how the fuck do you know that? Right? Probably seen that before. It's like, how did you come to that massive conclusion that that is the low? It's super simple. It is a 2 candlestick pattern. You have a move down and you have a move up. All right, a move down and a move up. Just zoom out so these are a little cleaner drawings. You have a move down and a move up. What does that mean? 2 candlestick pattern. Let's just use it on the chart. I'm going to draw you an example, but no better example than a real example. Right here. See a move up and a move down. What does that put in? A high, right? Because we have two kinds of things. We have a high and a low. A low, holy shit. Well, a low is a move down and a move up. A high is a move up and then a move down. Two candlesticks. One candlestick is making the move down. One candlestick is making the move up. What does that mean? A red candle, green candle, right? We're not talking about wicks. Oh, this wick went lower than that wick. No, it has to be a red candle and a green candle. This would be the opposite, a green candle and then a red candle. In the market, we have a high, right? We were just talking about that. A green candle and a red candle. Green candle, red candle, blue, black, right? Move up, move down. And then what do you have? A move down and then a move up. So that makes a low. Cool. We are on the 1 hour chart. And then you see it broke structure. Wow. Now what's going on? Well, now we're in a downtrend. We are waiting for confluence that we are in a downtrend. Breaking structure is one of those. We're going to get into how you can spot these things in sense of break of structure is an entire video because it's probably one of the most used things that you're going to use. Right now, we're just talking about how to read this because it looks like a bunch of chop. Let's go down to the 5 minute so we can see these little trends. In a move like this, you're going to look at it and be like, wow, okay, that's so clear. This is a downtrend. Correct. Very easy. What gets hard is what this is. Right? You might say like, okay, that's a downtrend. Yes, because this down here is lower than this. Correct. But what about when we came up, made a high here, a low here, a high here, came down, and then we made a high up here, made a high here, that's a high, and then we broke above it. What do you do in that situation? Are we in an uptrend? Right? For a second we are, then we come back down. So basically what you need to do is be able to go through this one candle or two candles really at a time and identify where all these levels are, right? Because if you can't see that, then you're going to be looking at the chart like, what am I waiting for? What am I doing? So let's go back to this 11 a.m. this morning. You have a move up and a move down, high. Move down, then move up, low. Move down, then move up, low. Move up, then move down, high. Low, high, low. What happened? We broke structure from this low to this because we got a candle closure underneath that low. Okay, let's keep going. And we have a high here, move up and a move down. This is a down candle. You can see that right there. Zoom in a little bit just for you guys. Those guys that are blind. Move down, move up, low. What do we do again? Broke structure, continuing that trend. Move up and move down, bam, right? Move up and move down. Oh my God, what did we do? We broke structure. But this is where people get mixed up. They're like, oh, broke structure, long it, going to the moon, next payment method. It's not the case because we're going to get into later. This is a confluence right here. This is a fair value gap. We completely respected this fair value gap and pushed lower. Don't worry about that right now. Right now, we're talking about highs and lows in the market. We're not getting advanced yet. We're just talking about up, down. Okay? We're going to get into all this. This is a move down. You can see here we broke that low. Cool. We are back in a downtrend. You would not do anything once this breaks. You're waiting. Hands off the keyboard. I don't know what's going on in the market. I'm not going to, my camera, fuck's sake. I'm not going to do anything. Okay? Then we had to move down. And move up, made a low. Cool. And this is a real time, obviously not replay. So this is the current period that I'm recording this at 1:30 in the afternoon. That is how you go candle by candle. And what you'll do is in the morning, when you're looking for your daily bias, you're going to be doing that. Looking at what did the market just do? What are we probably going to do? So this right here, if I were to look at it, I would say, okay, we're probably going to go down because we are in a downtrend. Now, you obviously don't just say, okay, it's going to go down, buy or sell. If it was going up, buy. Like, it has to be paired with other things. So calm down, people. But that is basically how you go through the market and find highs and lows and use them. So now let's get into some more advanced things that we're going to have complete videos on because these are important. But like we were just saying, fair value gaps is an imbalance in the market because there's orders that haven't been filled, and odds are if we came up, fill them, they're probably going to go down because basically what this is telling us, it's a 3-candle pattern. Briefly, guys, by the way, the entire video is going to be on this. This is telling us these 3 candles, 1, 2, and 3, down to this one. This is telling us that price just went, bam, down. We just skyrocketed down. Or, well, I guess that wouldn't be skyrocketing. Skyrocketing is up. Same thing, you get the point. We just pushed down super fast and we left a big gap right here in the middle. Gap. What's that mean? Price might come back up, fill their orders, and then shoot back down. That is, odds are, what's going to happen. And as we see, that's what happened. That's not just a one-off fluke. You can see this happen countless times. You can see even right here. Look at that little wick right there into that gap. Bam, push down. These are things that you're going to use in confluence with reading market structure to identify what price is going to do, because it is all one big skill. Just like a professional basketball player might know how to dribble, free throw, shoot threes, dunk, and they put it all together to be the best player that they could possibly be. It's the same thing. It's just a bunch of tools in your tool belt. So, next we're going to talk about the break of structure. Briefly, guys, by the way, briefly. Because this is going to be an entire video. The goal of today's video was identifying what candlesticks are, what market structure is, the trends, all that kind of stuff. The next thing is, how do we go from an uptrend to a downtrend? We said that we consolidate first, right? Yes, we do. You can see this consolidation here. Consolidation here. And then we pushed down and we broke structure, telling us that, hey, price might want to go down. And then we came back up, respected a bearish confluence, which was this fair value gap, telling us, okay, price is telling us clear as day, we want to go down. And we did. We pushed down. That's how you're going to use this in confluence. You're going to look at it and say, okay, we're in range, broke structure, cool, there's fair value gap, pushing lower. And the last thing I'm going to briefly talk about, this is very important, is liquidity. I'd say, what the fuck is liquidity, right? Liquidity is something that pushes the market. And I'm going to have a whole video on this. This is the next video, I believe. Yes, it is. Next video is the liquidity explained. This is what actually moves the market. So you can see different moves where, we should have been going up or down, and we just like a random wick, and then we just push down, like here, right here. See? Right here, we had this high. Right there. And then we had this wick, and then we pushed lower. What is that? That is grabbing liquidity. Liquidity is resting orders that are either a bunch of stop losses, a bunch of buys, just basically liquidity that big institutions, big banks can fill all their sell orders and push it down, or fill all their buy orders and push it up. That's what you're seeing right here. You pair this with the market structure, because now it's almost like you have fuel behind you. It's like if the car was in drive, you wouldn't try and push it from the front because it's like you're going to get ran over. But if its car's in drive and you push it from behind, it's going to move faster. this camera, I swear. So that is basically what liquidity is doing. So you can see we swept liquidity here, then we pushed down, made a low here, move up, made a high, down, then right here we push down and we break structure to the downside. Right here, now we're like, okay, cool. Now what? We're waiting. And then we have it move down, and I know you guys probably can't see this because you're not professional yet, but we have a fair value gap right here. And I am not, this is literally off the dome. We have a fair value gap. We can target these lows. You scroll in here. What day is this? Wednesday, the 11th. Scroll in here to the 5-minute. Hold on, let me go back in time here. This is a potential trade. Obviously, like I could see where it went, but this is how you would take this. You'd have a high here. You'd come up, break structure. This is that little wick that we saw. Break structure to the upside, come back down, inverse the gap, telling us price is going to go down. We're going to get into inverses as well. This is just like an example. Inverse the gap, shabam. Take that off the liquidity sweep, target the previous lows. Bam, you're a fucking billionaire. Briefly wanted to go over liquidity, fair value gap, break structure in this video because this is what you're going to pair together with everything else. It's not just identifying a trend when we're in consolidation, when we're, making a high, when we're making a low. It is all together. So the next video is going to be all about liquidity sweeps. What is liquidity? Why does it move the market? How do we use it? Everything like that. See you there.